You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome back to Wealth Formula Podcast. Today is the Wednesday show that you're used to having. Zulfe Ali from Valerity Group, and he is here today, but he wasn't last week. Zulfe, how are you, and where were you?
I'm doing great, Buck. I was actually dropping my son off at Indiana University so he can go back and be, with his studies and all that sort of stuff.
Good for you. I had a very tricky week myself. Last Friday, I had some visual symptoms. I had a little bit of a shadow kind of thing in my peripheral vision in my right eye. Went to the ophthalmologist on Friday. Next thing you know, I'm in the operating room having an emergency surgery for what was a retinal tear and a partial retinal detachment. Yeah. Something that, it's sort of a freak thing, I guess, as we get older, and I guess I am getting older. The gel part of the eye, the vitreous, pulls away from the retina. And most of the time, that's not a big deal. But in some people, as it pulls away from the retina, it will rip part of the retina. And then you can imagine like this sheet sitting against the back of the eye, which is a retina, and you have a tear in there. And then the fluid gets underneath it. It detaches that retina from the back of the eye. Now, if that completely detaches, you could lose your vision. So invariably, they saved my vision by going in there immediately and tacking it back down. It's hard to know because I got a bubble in my eye right now, so it's hard to see through it, but I can see that I have vision, which is a good sign.
Yeah.
But as we say, the show must go on, and that's what we're doing here. Neither rain nor snow nor detached retina, as they say.
That's right.
Although these days I'm not sure that the mail is quite as reliable. But anyway, let's talk about this show. This first, we usually start off with a little commentary on the week's show, and this week it was Sherry Jackson, I think, and she was talking. She was obviously very much inspired by the work of Robert Kiyosaki. A lot of things she said came from that. So, it was actually kind of a review. It sort of reminded me of myself maybe 9-10 years ago. What did you think?
I thought it was, very on mark with, all the things you talk about. So, it definitely was a good discussion. It was funny because I was thinking, like you were just talking about it, there's a turning point, right, where all of a sudden you realize, wait a second, there's a better way of doing this, or a different way of doing this than a typical W-2 mindset, right, where you just every day, go to sleep, wake up, do your job, come back, and rinse and repeat. I kind of likened it to, you ever see The Matrix where, the Morpheus tells, I can't remember Keanu Reeves' character. He's like, you take the blue pill or the red pill, right? You can take the blue pill and just keep earning your W-2 income. Yep. Or you take the red pill and you can see the cash flow quadrant. And, and all of a sudden the world kind of, you wake up to the world. So
it's almost like looking at the underbelly of personal finance, right? Because it's not always pretty, right? That's the thing. If you stay in that world, the matrix world that you're talking about, that is somebody who's got a job and who's like highly paid and goes home every evening and weekend thinking that job is going to always be there. But in the entrepreneurial side, you've got access to those financials. And I guess does that count as the red pill or is that the blue pill? I can't remember.
I think it's the red pill. The red pill takes you to the cash flow quadrant visibility. You can see what what reality is and what you should do about it. Yeah.
Well, I'm curious though from your end too, because listen, you're not your ordinary W-2 guy, right? I mean, you were high doing leveraged buyouts in the 90s and Wall Street and London, and then you ran a sovereign wealth fund in Bahrain, but you were still a hired hand, right? Like,
that's right.
So what was your turning point? What was your turning, or what happened to you?
Well, I mean, so I can first of all, I can vouch for that mindset, right? When you're earning a really nice salary, everything is very predictable. You know exactly how much you're making each month. Interestingly, I think you also start to form a mindset of, okay, since I'm making this much, I spend this much. I
Right.
will, and at some point I will save this much. And then you don't really think about anything more sophisticated than that because you got to focus again on getting up the next day for your job, right? And
Right.
so, for me, it was really coming back to U.S. Interacting with you on some of the things that you were doing, and by the time I decided I wanted to start doing something more entrepreneurial, that's when everything kind of opened up, saying, okay, well, actually, if I give up the W-2, I can actually go down multiple streams of potential income, right? I no
Right.
longer am limited by that. And a lot of times when you have a W-2 job, they'll limit you, right? Your contract
Right.
says that this is pretty much all you're going to do. You can't have like another business. You can't be spending lots of time doing other things. Now, that might be changing a little bit now with some of the flexibility that people are getting with work at home and flexible hours, all that sort of
Yeah.
stuff. But it was even harder before, I think. Um, but anyway, so I think the mindset becomes totally different. You start thinking about tax efficiency. You start thinking about different streams of income instead of like just that one paycheck coming day to day to day. And then that just automatically leads you to thinking through what kind of investments you want to make, and then while you're at it, why would I only invest in the stock market, right? Why would I not go into alternative assets, real estate, different types of investment structures, all that sort of stuff. I think things kind of open up when you finally swallow the pill and your mindset changes. And so that's really kind of what I got out of that conversation is just
Yeah.
that shift, which affects everything, right? And even if you're not going to lose your job, I think the other risk about W-2 income is that kind of being lulled into safety in the sense that you're really not even able to, for a lot of jobs, you're not even really going to be able to save enough to have the kind of income that you want in your retirement if you're not doing something really proactive about it. So
Right.
I think there's a dual-edged sword there. It's one, you might lose your job, but B, you just might be lulled into, something that ends up being pretty, mediocre at the end of the day.
Yeah, I think entrepreneurship also heightens your defense mechanism too, right? You're much more aware of the monthly or yearly fluctuations in revenues, and therefore you're kind of on your guard a lot more. I always talked about my concern, even in entrepreneurial endeavors, that what I don't want to do is get caught in what I called a single point failure, which is that I only had, one stream of income, even if that was entrepreneurial. I see some of my business friends do this, right? They keep burying their own money right back into that one business. And the risk of that, of course, is that one business somehow falls apart. You're totally screwed. There is another part of this, which is simply that to say that you don't have to quit your day job either. But I think having an awareness that this world exists out there and preemptively starting to think about, what can you do to not be in a position where you're in single point failure? What can you do, whether that's buying businesses, or investing in businesses, or really just trying to really be active in your own personal finance? I think that to me is probably suitable for a lot of people listening to this program, because if you're making, $500,000 to $1 million a year in W-2, and you don't have a whole lot of other skills, I mean, maybe you're a surgeon or something like that, it may not be wise just to throw it all away and like some crazy people do, like I did some time ago. But I don't know that I would recommend that for everybody. But it is at least being aware of that and trying very hard to not become a potentially single point failure type person is important. So anyway, I think we've beaten that to death. Let's talk about so we've had a couple weeks here since we talked about the economy. There was the whole Jackson Hole thing. What's going on with the economy here?
Well, yeah, I mean, you mentioned Jackson Hole, so that happened last week.
The Fed meeting. Yeah.
Well, it's not a Fed meeting, but there is the Fed is meeting there. It's not a formal, FOMC meeting, but there were some important statements made by Chairman Powell where he finally explicitly said it is time to start the rate cutting cycle. He didn't go into specifics how much and when, but it was clear that the Fed is now planning its move to start cutting. I think everybody expects that it's September. Everybody expects that it's going to be somewhere between 25 to 50 basis points. Probably 25 is where more of the probability is at, unless there's a jobs report due on September 6th, which is just a couple days before the Fed meeting. If that shows that the labor market is unraveling faster than it desired or faster than expected, then I could see the Fed jumping in with the 50 basis points cut. But otherwise, I think 25 is what everyone's assuming at this point.
What do you make of the? You talk about the jobs report. What do you make about these massive revisions that were made?
Yeah.
And it wasn't like over 1 million jobs, like less than they actually reported.
Yeah. There's the data. The data apparently can get skewed by a lot of different things. I think summer employment, part-time employment, some of it's impacted by other factors that are not even related to. So it is kind of odd that big of a revise to the jobs report from the prior month. But yeah, I mean, it happens from time to time. There's always some amount of revision because they're always estimating on portions of what gets fed into their report. But to have that big of a swing is pretty unusual.
Yeah, the other thing that's odd to me, and I mean, I think it's, who knows, but it's always in one direction. At least in this most recent correction, right? We're talking about really these multiple months being revised, and there are all too many jobs reported, right?
Yeah.
I don't know.
Yeah, it's unusual, but it is what it is. But yeah, so I think we're talking about jobs. That is the focus now for the Fed. I think inflation seems like it's pretty much in check because we saw even the last CPI data that was from earlier in August showed an increase of 2.9%. That is coming down. That's the lowest we've been since March 2021. And it's the fourth consecutive month of decreasing inflation. So I think the Fed, even though their target's 2%, I think they're comfortable that the trajectory is there and it's likely to continue. As we noted before, the shelter component of CPI is very large, and that is still showing 5.1% inflation year over year. And that's likely to come down just because that's trailing data that gets embedded in the CPI report. So as we get closer to where rents have in reality been pretty flat, that's just going to take down that number overall.
Yeah, and to reiterate, that 5.1%, if you look at the major, apartments.com or whatever, I mean, that really is pretty darn flat. Even if you were generous and you gave that a 2%, that according to Campbell Harvey, that 2.9% would be closer to 1.9%, because the shelter makes up about 70% of that CPI number. And so I suspect that, the Fed knows that. And, that's probably another reason why they've really sort of, really actually pivoted and said that they're going to be reversing course.
Yeah, listen, I think overall we know the market, the economy is definitely slowing down. It looks like it's slowing down at a good pace. In fact, there's a interesting data point coming out from the Texas Fed that noted that there's a sausage indicator, which is which is turning up, meaning that more sausages relative to red meat are being purchased by consumers, which means they're trading down to a cheaper form of protein. And so when the sausage indicator goes up, the economy is softening.
But wouldn't that go up every football season? I mean, that's strange.
That is a good question. They must do something to
There's
adjust
probably
for the Sunday and Monday football.
Adjusted for NFL schedule.
Yeah.
Well,
so anyway, it's a good situation. We're back to where people are thinking, soft landing again, right? We talked about that several weeks ago, and then we had a bit of a scare because that labor report came out that was really ugly at the very beginning of August. Everything traded off. People were like, okay, we're going to spin into a hard landing, and then subsequently there's been revisions. Subsequently, there's data coming out showing actually things are kind of nicely slowing down overall. So markets liked it. We've got S&P, NASDAQ, Dow, Russell 2000. All the indices are either at record highs or they're very close to record highs. We've seen a very broad-based strengthening, meaning it's not just those big mega tech stocks, mega cap tech stocks. It's been old industry stocks as reflected in the Dow, which is at record high, as well as smaller cap stuff, which is reflected in the Russell 2000. So it's actually a pretty healthy situation when it's such a broad kind of a strength in the market from the equity side. So equity markets are sold on soft landing. I'd say the fixed income markets are a little bit probably a little bit more nervous, because if you see what's happened to the yields there, when we had that scary labor report, they went down pretty sharply, and they haven't really gone back up from there. So the 10-year is still at that 3.8% level, and 5 years at 3.65. So interestingly, I would say that the fixed income markets, the bond markets, are saying there's a bit more probability of a harder landing, a recessionary environment. But the stock market is saying, it's probably a soft landing, not to worry about inflation or recession just yet.
The stock market's an interesting thing to look on this, because I don't know, there's sort of the economics behind it as well, but there's also this idea that money's getting cheaper, right? Asset prices in general go up. So with the Fed projecting now the rate cuts, is that in and of itself a reason why we could be seeing a rise in the stock prices?
It is in the sense that the valuations are dependent on cost of capital, and so it's a discount rate. And if you use a lower discount rate, meaning the cost of capital, or based on what the risk-free rate is, then you get higher valuation. So there is correlation between the rates and the valuation of publicly traded, as well as private companies as well.
Yeah. What about gold and Bitcoin? You want to talk about those?
Well, other than the fact that, again, gold all-time high, it is just cruising. And again, I don't have a very good answer as to the fundamentals, other than it seems like the foreign buyers continue to buy. So that's interesting, particularly given the fact that inflation is coming down and everybody assumes that it's going to continue to come down. You would have thought gold as a hedge is kind of losing its one of its essential kind of values, but here it is. It's trading through the roof. And then your favorite kind of asset class, the cryptocurrencies. Bitcoin's doing pretty well. I think 62,000 when it was down almost to 50,000 earlier this month alone. So nice jump back there.
It might have been in part from the support from RFK Jr. For Trump. that there's definitely a partisan difference, at least perceived on cryptocurrencies. Trump's come out pretty, as an advocate for Bitcoin now, and RFK Jr. is talking about buying I think he said something like 4 million Bitcoin, which would be a pretty good chunk compared to the total amount that will ever be created, which is 21 million Bitcoin. But he's apparently saying he wants to match it up with gold, and so there is an interesting dynamic there as well. I see Solana's the one I've been watching, and if I was more inclined to be buying cryptocurrency right now, that's something that people should be maybe looking into, or not. I'm not giving you any advice here, but it is something that I expect Solana to do really well. In fact, Solana has been dominating the meme coin space because it's so fast, and also it's being used with PayPal, and those numbers are going crazy. So Solana is just a really a faster, cheaper Ethereum. Essentially, that's what it is, and it's one to keep an eye out on. But let's see, anything else we want to cover here?
Not really. I mean, there's NVIDIA is going to be, releasing their earnings on Wednesday after the market, so that'll be a pretty interesting barometer of what's going on in the AI growth story. So that has a potential to either keep supporting the markets where they're going, or potentially cause some significant volatility depending on how they report. So I think that's one we're looking at. And like I said, the September 6th labor report's the one we got to keep an eye on, because I think that'll have a big impact, and potentially a direct impact of what the Fed does a few days after that.
Potentially an impact on the election as well.
Yeah.
So
yeah, I think definitely. A rate cut in advance of the election is favorable for the Democrats. So yeah, could have something there.
Well, normally we do a product by this point, but I think I am actually due to put my head flat down on a pillow straight down at this point, so we're gonna have to skip that this week. But next week we will come back with some more educational stuff to tie it up. So thanks a lot, Zulfe, for joining me. I'll see you next Tuesday, or see you next Tuesday. We play it on Wednesday.
Yeah. Well, take care of yourself, Buck.
All right.
Good to
take care.
Bye.
Thank you for listening to the Wealth Formula podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.